Bitcoin is already making new all-time highs in currencies that are undergoing hyperinflation, as we see in Argentina and Venezuela and Turkey. In these places, Bitcoin is already hitting new all-time highs because their local currencies are collapsing. The dollar is it's the cleanest shirt at the laundry, right? It's a fiat money, but it's on a relative to these other fiat monies, it's the less worst option. But eventually it too will go this way of all fiat money. So fiat money is we're at the end game for fiat money, which was like a 300-year experiment. And then in 1971, of course, we went on an all fiat money for the world when Nixon closed the gold window here in the United States.
Getting these spot ETFs from Fidelity and from Blackrock, because these institutions control over $15 trillion of wealth control. They oversee over $15 trillion of wealth for their investors. And why are they doing this?
Fundamentals of the US dollar are terrible. And everyone who's got a portfolio, and there's about $100 trillion under management by portfolio managers around the world. And that game is basically asset allocation. You're allocating your portfolio to avoid risk and get the biggest return you can. And the dollar is being downsized. People are moving out of the dollar. They're moving into Bitcoin. Bitcoin is now considered to be a safe haven. It's considered to be a risk-off investment, which is incredible because when we started back in 2011, when it was $1, it was considered to be the most speculative play in history, right? And now it's considered to be the safest asset in the world, safer than bonds. It's less volatile than bonds than in 2023, safer than the property market. Property market's collapsing. Look at all these commercial real estate deals every day. Washington, D.C., all these, New York City, these huge office buildings that were bought for $300 million are going on sale for $30 million. It's like the biggest markdown in commercial real estate. It's unbelievable. And of course, that commercial real estate is the collateral that holds together all the banks that make all those loans. That's their primary business, is making real estate loans. So that means the balance sheet of all the major banks are severely impaired, which means they're going to have to get a massive bailout, which means going further into debt, which means interest rates are going to go even higher, which means the dollar is going to be continuously under attack. And nobody wants the dollar. Nobody wants the U.S. Treasury bonds. And into this mix is Bitcoin as a safe haven play. It separates money from state. It's unconfiscatable. It's cheap relative to gold, way cheap relative to gold, and it's cheap relative to the bond market. The global bond market it's still incredibly cheap relative to what you could call the total addressable market, or TAM. Total addressable market for Bitcoin is 400 trillion, because that's the total size of the pot of financialized assets on planet Earth. And it's everything on planet Earth that's traded is heading towards zero against Bitcoin, because Bitcoin becomes the global reserve standard.
Well, over the last 12, you can look at the charts of Bitcoin. It is super volatile. So I don't ever. So we have to look at where you are. If you're in a place like Venezuela or Argentina, it may have been very valuable for you to be in Bitcoin. Okay, depending on when you bought in. And if you're here in North America, if you're in the US or Canada, and you have a lot of cash, well, part of your strategy, which should probably be, and everybody's different, so everybody has to do their own investment research and work with their own manager. But if you have a lot of cash, parking in short-term treasuries, they're default on those. And you're going to get some sort of yield on that. You can park some there waiting for opportunities as volatility comes. And if we have some sort of credit event where all assets correlate to one, and you have a V drop, a drawdown, well, that gives you an opportunity to add to those exposures. But to your point, Bitcoin, I would not put all of my excess cash in Bitcoin because it's too volatile. And that is why I also own gold. I know that if gold, as volatile as it has been, it's nowhere near the volatility of Bitcoin. So you can actually have a stable asset there, and it will protect value over time. And even though it won't be in 10 years the same kind of protection as Bitcoin will be, it will be better than having US dollars, in my opinion. The US has had a history of banning hard monies. It banned gold. It seized gold 100 years ago. I do believe that it would be difficult to do the same thing in this day and age. In where we are now, I believe it would be difficult, and just the nature of Bitcoin, it would be difficult. You can't ban Bitcoin across the world. There's tens of thousands of nodes and miners across the world. There's no way that they can just shut it down. I think we already have enough of a voice that it wouldn't get through. So what you're talking about is important. It is very important for Bitcoin to get some legislation around it where we have some clarity on exactly what the rules are going to be, and it's completely separated from everything else. I think that's very important. I think a huge step toward that is getting these spot ETFs from Fidelity and from Blackrock, because these institutions control over $15 trillion of wealth control. They oversee over $15 trillion of wealth for their investors. And why are they doing this? They're doing it because their investors are demanding it. That's why. They're not doing it because they think they're going to go and buy a bunch for their own balance sheet. They're doing it because their investors are asking for it. They see an opportunity in the market. And I don't believe they would do that without being a very strong voice for a positive resolution around any kind of legislation that was put forward. I don't think there's anything that really is that in reality can compete with it. It's been compared to gold quite a bit, but Bitcoin has some facets that gold just couldn't have. It's not easily transferable. Bitcoin is. It's not, it's not easily transportable. Bitcoin is. You memorize your 12 or 24 seed phrase and you can take it anywhere with you in the whole world. You could go to Mars with it. You can't do that with gold. It's very difficult to seize. If you know your phrase, it's difficult to seize. So it just has properties that gold doesn't. I would say it gets compared to it a lot, like it's digital gold, but to me, it's far better. I've thought a lot about this. Bitcoin's a technology. I come from the institutional world, institutional trading world, and I believe that it's become correlated, not recently, but over the last 2 years, up to the last few months, last month or so, when Bitcoin kind of broke away because of the ETF enthusiasm. But before that, I believe what happened was it's been looked at as like a technology. And so it's kind of grouped into that technology world. And so it is a risk on asset to those investors. That's the way they see it. They see it as a risk on asset. Even though if you truly understand it, you'll understand that it's perfectly risk off. It's actually better risk off than even bonds. But the issue is that it's been seen and analyzed and been traded in that world primarily up until now.